Job costing involves the calculation of costs involved in a construction job, or the manufacturing of goods done in discrete batches. These costs are recorded in ledger accounts throughout the life of the job or batch and are then summarized in the final trial balance before the preparing of the job cost or batch manufacturing statement. Job costing versus process costing. Job costing is fundamental to managerial accounting. It differs from process costing in that the flow of costs is tracked by job or batch instead of by process. The distinction between job costing and process costing hinges on the nature of the product and, therefore, on the type of production process. Process costing is used when the products are more homogeneous in nature. Conversely, job costing systems assign costs to distinct production jobs that are significantly different. An average cost per unit of product is then calculated for each job. Process costing systems assign costs to one or more production processes. Because all units are identical or very similar, average costs for each unit of product are calculated by dividing the process costs by the number of units produced. Many businesses produce products with some unique features and some common processes. These businesses use costing systems that have both job and process costing features. Using job costing, job costing is the process of determining the labor and materials cost for each job in a systematic way, and then using this information to create a quote for the customer. Job costing or cost accounting can be used in virtually any industry to ensure that the product pricing covers actual costs, overhead and provides a profit. The purpose of any business is to make money, and job costing is the most effective way to ensure that occurs. In a job costing system, costs may be accumulated either by job or by batch. For a typical job, direct material, labor, subcontract costs, equipment, and other direct costs are tracked at their actual values. These are accrued until the job or batch is completed. Overhead or burden may be applied either by using a rate based on direct labor hours or by using some other activity-based costing cost driver. In either case, once overhead burden is added, the total cost for the job can be determined. If the accountant is using a general ledger accounting system, which lacks true job costing functionality, the costs must be manually transferred out of work in process to finished goods. Of course, in the days of computerized job costing software, journaling costs manually is an obsolete process. Such hand journaling is mandatory for companies that continue to use general accounting software to do job costing. Enlightened accountants are moving forward and using job costing software, thereby improving cost control, reducing risk, and increasing the chance of profitability. Using cost codes in budgeting. In a true job cost accounting system, a budget is set up in advance of the job. As actual costs are accrued, they are compared to budgeted costs, to determine variances for each phase of each job. Cost codes are used for each phase, allowing mini-budgets to be generated and tracked. In the construction industry, the Construction Specifications Institute has established an industry-standard cost coding system. Job costing system consists of various cost driver that drives job cost. These examples will assume that overhead is allocated on the basis of direct labor hours. Direct material is abbreviated DM, direct labor as DL, and overhead as OH. XYZ Corporation manufactures airplanes. 1 order was completed, 2 received further work, and 1 new order was received. Overhead is allocated at a rate of $100 per deciliter hour. All employees earn $20 per hour. Beginning work in process balances are as follows: number 110, $25,000. Number 111, $10,000. Number 112, $12,000. Number 113, $0. Below are the amounts of DM and DL used. Number 110, $2,000 DM, 25 deciliters hours. Therefore, $5,000 in new cost is added. The job had a total cost of $30,000. This amount is transferred out of work in process to finished goods or cost of goods sold. Number 111, $3,000 DM, 30 deciliters hours. Therefore, $6,600 in new cost is added. The job has a new total cost of $16,600. This amount remains in work in process until completion. Number 112, $5,000 dm, 100 deciliters hours. Therefore, $17,000 in new cost is added. The job has a new total cost of $29,000. This amount remains in work in process until completion. Number 113, $1,000 dm, 10 deciliters hours. Therefore, $2,200 in new cost is added. The job has a new total cost of $2,200. This amount remains in work in process until completion. Caution: remember, overhead is allocated on the basis of DL hours. While in this case, allocating overhead on the basis of DL cost would produce the same result, this may not always be the case. Since rates are developed based on a budget, if employees are actually paid a different rate from the budgeted rate, allocating at a $5 to $1 ratio would produce a different cost from the stated $100 per deciliter hour allocation. Companies use slightly different overhead allocation methods. References. External links: Monitoring Employee Activity with an Automated Job Costing System, White Paper, http://www.penta.com/ job-cost-accounting-software.html